Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting this evening. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, just waiting on a few more responses. Okay, looks like we're up and running fine. Everyone's giving the thumbs up. Okay, so a couple driving stories today fundamentally we'll take a look at real quick before we get on the charts. Not too complicated today to see what's happening. As always, keep in mind, no one trade is guaranteed to profit. I think we're all aware of that. You should manage risk in one way or another. Because each and every trade has risk of loss. Now, we also, on the flip side, understand that each and every trade has a good potential for profit, which is why we're all here, is to try and find the best way to hopefully go after those profits. But in some way, make sure you're managing your risk and keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, fundamental analysis, real quick, we can break down into two main types many times. And so one type of fundamental news would be regular economic events. We'll take a look at some of that came in today. Folks were focused on crude oil, some, and some other data that came in. And this is the type of data that's scheduled. We know exactly what the topic will be, when the numbers are coming in, the time of day, etc. So you can account for that a bit easier in terms of timing and scope. You don't necessarily know what the numbers will be in advance. Wouldn't that be nice? But you at least can account for the timing of things on different instruments that are related to economic events that are scheduled. Now, the other type of fundamental news would be extraordinary news, extraordinary economic events. And this is the type of thing where headlines come in. We don't exactly know what they'll be or when they'll be. In the past, it's been things about COVID. It's been things about the vaccine, about Brexit. Even before the whole COVID thing, there were breaking headlines that you couldn't anticipate what they would be regarding Brexit, and on if we go back in time. So these are the sort of fundamental news stories that, in terms of scope and timing, we're not sure what they'll be or when they'll be, but you can still account for them in your trading strategy by putting what we could call trip lines in the market with pending orders, many times sell stop or buy stop, pending orders in strategic locations to get in on trades if important price levels break through. And so we'll take a look at that as well and how you easily could have taken advantage of that on some of the current instruments without even knowing what the headlines were going to be. You easily could have profited on today's movements, for example, on gold or some other instruments that had large movements. So we'll take a look at the technical analysis behind that type of fundamental trading. And yes, you have to combine technical analysis with the fundamentals to get these strategic entry points and exit points. Now, if you have any questions, you want to give any input as we go along, please feel free to do so. A good place to start is with the headlines. So we can pull up any number of sources across the internet, sources that you might trust, the information coming from, and real quick, you can get a feel for the sentiment. From this morning, we saw the US futures, US 30, US 500, the futures were in the green from early on. We saw that the volatility index was pretty flat, so there wasn't a lot of volatility or fear on the markets. The other nickname for this VIX index, besides the volatility index, is the fear index. And so fear and volatility were pretty flat today. It's slightly on the downside here, which is positive sentiment typically if fear is down. And then we're looking at the dollar index, which has strengthened. And those two things are usually not happening at the same time, meaning the US dollar strengthening and fear is down. Usually if fear is down, the US dollar is not strengthening so much, because a lot of times when there's fear, people kind of rush to the US dollar as somewhat of a currency safe haven. I think today the US dollar is strengthening for other reasons, and we'll talk about that. So real quick, we could get a feel even from this morning that we saw positivity in the futures market. We saw flat or nearly flat volatility, and we saw the dollar index somewhat strengthening through the day today. And so real quick, based on that, as you jump into the charts, you could have had a preference on which way you would have traded, and we'll take a look at how that would have went if you just used that quick snippet of information to help guide your trading. And basically, this gives you an idea of the sentiment. And what we're looking at is low fear, positive sentiment on the futures, and a strengthening US dollar. Okay, there are some things you can predict from that as well. Like, what does gold do if the US dollar is strong? If the US dollar is not inflationary, if instead of weakening, it's strengthening, what's the safe haven gold usually do? Since gold is a safe haven against inflation, if the US dollar is strengthening, then typically gold would be dropping. Okay, and so there are things we could have looked at, and oil has a harder time climbing if the US dollar is strengthening as well. So some things we could have expected maybe. So this headline, oil ignores US weekly build to focus on Goldman's $90 call. Okay, so let's try and undress what that headline is saying. They're saying oil ignored the crude oil inventory numbers that came out today, which showed a much larger buildup of supply in the US than expected. So if we look here, beyond the pending home sales being way better than expected, that's positive news, okay? Very positive news in terms of the housing sector in the US. Pending home sales, almost 8 times, 7 times higher than the expected number. That's a very, very strong number. Crude oil inventories, however, the expectation was the inventories would drop by over 1.5 million. The crude oil inventories in the US went up by more than 4.5 million. So the polar opposite of the expectation. Crude oil inventories went through the roof, meaning there's been lower usage of crude oil or a larger supply build up, whatever the case may be. Did production go up? Did use go down? Certainly with the hurricane that went through and the decrease in production capability, it probably was a decrease in utilization. Okay, so supplies went way up. What usually happens when crude oil supplies go way up higher than expected is the price drops typically. It scares people from wanting to hold oil as a investment. If the supply went way up more than expectation, usually that means, hey, the price is going to drop if there's a huge supply. So people sell and you have a drop in the price. So that kind of weighed on oil a little bit. And then a strengthening US dollar didn't help, right? So both of those things worked against oil going up. But why did oil not crash? If we look at the charts, we'll see oil didn't really crash. You'd think it would crash down with the supply being, 6 million barrels higher than expected. That alone should be enough to rapidly drop the price of crude oil. While crude oil's had trouble going up, it certainly didn't crash today. So why not? And what we're looking at here is Goldman's predicts $90 a barrel. Okay, so Goldman Sachs has called for $90 a barrel, and the oil market seems bent on getting there. That's what this headline is talking about. So if Goldman Sachs talks, a lot of times people listen. They seem to know what they're talking about a lot of times. And if they're predicting $90 a barrel, well, then some people believe that. Many investors believe them. So that kind of canceled each other out today, with the crude oil inventory being very high. But Goldman Sachs saying, hey, earlier this week, they said, we believe, $90 a barrel is possible. So there's some mixed movement there on crude oil. So some ranging type movement based on the fundamentals. And don't forget also, hospitalizations are dropping, even though the Delta variant has been spreading some in different countries, hospitalization rate is dropping. And so there's some optimism about that too in terms of COVID. So that's helping to keep prices up even when the supply was much higher than expected in the US inventories. Now, if we move on, beyond these scheduled announcements, which we saw U.S. housing data, very, very strong, but oil data not so strong with high inventories. Then we go on to some other headlines. Wall Street rises boosted by tech stocks and Boeing. Okay, so tech stocks and Boeing had some positive news, and that helped keep Wall Street up. So there's some optimism there in different sectors of the environment, or of the economy, I should say, the economic environment. And so this is helping with the positive sentiment. That's why the futures were green. Okay, even though there was a lower utilization of oil than expected, you've got the Boeing effect of the positivity about the lower hospitalizations of COVID, positivity from Goldman Sachs, and then you've got tech stocks and Boeing with some positive news. And so the positive seems to have outweighed the negative so far today. Now, why is the US dollar strengthening then? Okay, there's not a lot of fear on the market. Why is the US dollar getting so much stronger? And you read this headline and you understand. The Feds, another person from the Feds in the US has said now, supporting others' opinions and ideas, that it will soon be time to begin tapering bond purchases. Okay, the bond purchases were part of the stimulus package that was helping to prop up the US economy through the COVID crisis, to help prevent too much inflation of the US dollar. They're starting to cut back on some of these stimulus measures. And so, taking measures to prevent inflation, right? Cutting back on stimulus measures, such as the bond purchasing program, causes the US dollar to be anti-inflationary, meaning to strengthen. Rather than the dollar becoming less valuable with too much stimulus being handed out, they cut back on stimulus. Any one US dollar becomes more valuable. It strengthens as you remove the stimulus measures, or even talk about maybe removing the stimulus measures soon, which is what this headline says. So even before the stimulus measures are cut back, the anticipation that that will happen soon, potentially, causes the US dollar to strengthen. That's what's happened today. So a strengthening US dollar has been good for those of you who, at least in the short term, were shorting gold. And this effect has been going on for some time, which is why we've seen gold drop from 2,000 to 1,900 to 1,800 towards 1,700. It doesn't mean this will continue forever. The US is maybe going to pass a $3.5 trillion budget. They might have another $1 trillion stimulus release of funds for infrastructure stimulus, and on in the US. Reasons why inflationary fears could come back again. But for the moment, the sentiment is, hey, they're going to cut back on at least part of the stimulus measures here, and so the USD is at least temporarily strengthening. Yeah, exactly. Someone's making the comment, or the question, does printing money increase inflation? And the answer is yes. That's exactly. Where do you think the US gets trillions and trillions of dollars of stimulus? The US has been operating at a budget deficit for years, for decades, meaning they're spending more money in the government than they take in taxes. And so how in the world can they come up with extra trillions of dollars? They've done, 2, 3 different stimulus measures, multi-trillions of dollars, just handing out checks to millions of Americans and to businesses. Where do they get this money? Well, they don't have it, so they're printing it. And so what happens to the value of any currency if you're printing the currency and handing it out? Well, any one of them becomes worth less, not worthless, but worth less. And so that's what inflation is, where the value of the currency is lowered. Meaning, if I go to any store to buy a product, it takes more dollars. The price went up. It takes more dollars to buy the same thing that cost less 3 months ago. So because it takes more dollars, prices are rising faster than is healthy. You call that out of control inflation if that's happening. Now the question was it out of control? Was inflation in the US rising faster than is healthy? And many opinions was yes. Gas prices were going up faster than people were comfortable with, and prices on many other things, groceries and common household products, people were complaining. Prices were rising faster than incomes were, faster than the stimulus could be passed out, or more so than the effect of the stimulus helped people if prices were rising too fast. So this was the fear, was that printing more money and handing it out was causing prices to rise, countering the benefit of having the money handed out to you. And so it could have an effect. You know, home prices were rising at a rate that hadn't been seen in a very long time. And the fear was, well, this is going to price people out of the home market then. So then they say, well, we need to do something maybe to slow down the inflation of prices. You know, no inflation is bad, but too much inflation is bad as well. And so this is what they're talking about, and that's why they're talking about maybe it's time to cut back on the bond purchasing in the US, which was helping prop up the economy, so that maybe inflation slows down a bit. And you know, a healthy economy shouldn't depend upon stimulus measures being there indefinitely. That's the opinion of some of those in the Fed in the US, and it probably makes sense. Okay, so next headline, US pending home sales jumped to 7-month high. The negative side of that, mortgage applications have fallen. Okay, so home sales jumped to a 7-month high, and you say, okay, why? Well, people had a lot of stimulus handed out. There's ultra low interest rates, artificially low. The government is keeping interest rates lower than is sustainable forever to help the economy out. Well, you get interest rates so low, then people start buying houses that they couldn't otherwise afford. And so it makes sense that pending home sales jumped, right? Higher than expected. It's at a 7-month high. Wow, that's great. But maybe they jumped a little artificially. There's a lot of stimulus measures involved allowing that to happen. And so another side of that is mortgage applications have fallen. Well, why would that be? Maybe prices have risen too fast. There's so much demand because there was so much easy money. It drove the prices up too quickly. And now the future sales don't look good if more mortgage applications have dropped. So the sales were up, but the applications are down. That means maybe people are getting outpriced now. And so that goes right along with the idea of, well, maybe we need to cut back on the stimulus measures. Okay, great. It helped houses sell, but now it's hurting the sale of houses if the prices went up too fast, if the pending applications have dropped, right? So, and this is happening in different sectors of the economy, not just in housing potentially. And so this is the idea of maybe scaling back the stimulus. And so if there's the idea that, hey, they're going to act on cutting back the bond buying and other measures of stimulus, that's why the US dollar is strengthening. Okay, makes sense. And that's why gold would fall. It's the opposite of inflation fears, which drives gold up and weakens the US dollar. It's fears that, hey, they're going to cut back stimulus. And so now they start selling gold and buying the US dollar, which should strengthen if stimulus gets cut back. So that's what's happening fundamentally in the markets today with oil, with the strength of the US dollar, and with sentiment in general. Okay, so when we jump on the live charts, now we have an idea of you know, what direction do we prefer to trade on different instruments? When we look at the movements on the charts, we can understand why they moved like they did. Why did gold break another support level and drop further? Well, we know why. All this talk about cutting back on stimulus measures in the US strengthened the USD and caused gold to be less attractive. Okay, so that's important when you go onto the charts, that you do a quick synopsis like that, 5 minutes, 10 minutes, that's all it should take to get an idea of, okay, understanding why did the movements occur like they did, understand the fundamental story, and now you can go into things a bit more knowledgeable. Doesn't mean the fundamental news can't change in the next 5 minutes, because it could. Never know when that next headline's going to break. But at least you go into it understanding what's happening right now, and that can be advantageous. I mentioned that you should manage risk in a way. Before we get on the live charts, I want to show you a couple tools that we have at AvaTrade that you don't see at other brokers that will help you manage your risk. Okay, and so if you use our AvaTrade Go mobile app, you find it under our trading platforms. If you go with your mobile device, go to AvaTrade Go. We have links to the major app stores. Go there. You can download our app. You will see features on it like AvaProtect. You can protect against any and all losses by the hour, by the multiple hours, by the day. If the trade goes the right way, the profits are yours. If the trade goes horribly wrong, like if you were buying on gold this past day and gold plunged, okay, you're only down the premium. We cover with the protection all of the losses during the protected time period. They're added back to your account when the coverage ends, if there's a negative floating, or if the trade closes, either you close it manually or it gets stopped out during the covered time period. Well, the trade closes, so the protection's over, but whatever the negative was gets added back. Then you could re-enter at a better price, and you're only down the premium. If it just goes halfway back up on your second try, you're ahead of the cost of the premium and all of those other losses you did not incur, right? So AvaProtect is a tremendous way to manage risk on gold, silver, and FX pairings that's available. These other features, the take profit, the stop loss, which act as trade calculators, that's there on every instrument that you want to trade on. If you program the take profit and stop loss with your prices that you would want to get out at, it tells you right next to it how much you would make to that price, what you're risking to that price based on your trade size and the price you enter for your stop loss and take profit. Calculates it for you in your account currency. So it doesn't matter if you're trading on something that has a margin currency or a transactional currency of USD or pound or yen or whatever it is, whatever your balance is, whatever your account currency, it calculates it for you and tells you what you're risking in your account currency and what your potential profit would be. Okay, so those features are built into the app and also built into our WebTrader platform. So if you log in from our main website, from this login, you'll be in our WebTrader platform, which looks like this. It has the same features I just showed you on the app. It has the same features on the WebTrader platform and even more features. So not only if we go to something like gold or silver or whatever FX pairing you choose, what you're going to see is that the AvaProtect feature is there. And you can very simply search using our search tool for any instrument. You can find it very quickly, much more user-friendly than the MT4, MT5 platforms for searching for things, for these extra features that we have. And by the way, this isn't a separate account. This trades on your same MT4 and MT5 accounts. You can switch between your MT4 and MT5 accounts, your live accounts, your demo accounts right here. Okay, switch to demo, switch to live, and trades you place here show on the MT4 and MT5. So here's AvaProtect. I can protect by the hour or by the day, and it shows my small premium cost. I mean, to protect for a full day for $31, the potential profit on 5 ounces, you see gold move $50 in a day, easy, $100. So if it's a volatile day, if you think there's reason for gold to have a big movement and you're trading on, I don't know, 10 ounces of gold and it costs you $63 for protection, in one day, if it even moves $10, you make more than the cost of the premium. And if gold's going the right direction for you, it could easily move $50, $100 the right way. So you gauge the potential profit versus the cost of the protection. You don't have any other risk during that protected time period. And you could even go 2 days. And look, the cost's not that much more, right? So for another less than $30, I can have 2 days protection. And who doesn't know that gold could move more than $10 in 2 days to cover the cost of the premium? Could go much more than that. So this could be part of a risk management plan if you see fit to use AvaProtect. Here's the take profit and stop loss. If you activate those, like I said, it's calculating your possible profit and your possible loss for you based on the prices you put. Okay, so very cool features. Since we're talking about fundamental analysis, we can take a look at Trading Central, which has premium features for both technical and fundamental analysis. You have free signals with something like analyst views and Forex featured ideas. It breaks down the technical analysis, what signals expected, the breakthrough movements, etc. And also the fundamental analysis for many instruments, especially stocks, you can find in the Market Buzz. So any of these bubbles, the larger the bubble, the more stories we have that might help predict the movement. So, Amazon's one of the larger ones here. So if we click on it, we'll find 184 recent publications that involve Amazon, starting with the most recent. 37 minutes ago, this article just came out that mentions Amazon. It may help you decide what way to trade on Amazon right now. The fundamental analysis is done for you here. You can click on the article, get a snippet. You can bring up the entire article just like that and see, okay, what's going on with Amazon? What's the latest article from 37 minutes ago? And so very nice time-saving features that if you're into trading, time and timing is everything. And so this fundamental analysis tool can really help you out. It's only available on the WebTrader platform. And by the way, you can trade on the WebTrader platform, not just from your PC or your Mac, but also you can log into it and it works on mobile devices. So you can use AvaTrade Go as a mobile on your mobile, and you can also use the WebTrader on your mobile device. Real quick, let's jump on the MT4 platform. Let's look at some of the movements. And so here's gold. Right away we can say, okay, we know why gold is dropping. You see it. These are 1 hour candles. We're looking at dropping of 1, 2, 3, 4, 5, 6 hours straight of dropping with one small green candle in that time frame. Okay, very strong downtrend on gold. If you looked and you saw the headlines today and you understood, wow, the US dollar has a lot of reason to strengthen, fundamentally speaking, because they're talking about, again, cutting back on the bond buying program in the US, then you look at this and you say, wow, if I see gold break a support level, then I'm going to sell, right? And you look and you say, okay, here's a support level. Support, up, right? Support, up, and then a breakthrough, and it becomes resistance here, resistance. So when this got back above that price level earlier today, you could say, okay, if it breaks back below this old support level right here, if it breaks back below that, I'm in on a sell. So you easily could have said 7, 8 hours ago when gold was up here around 1746, that if it breaks down below this support level right here, this support level, support, that the last time it broke through, it dropped all the way down to here, okay? You could have said, I'll put a sell stop below that price, and if it breaks below this support level, I'm selling. And that's a technical strategy, waiting for confirmation of a downtrend. The confirmation of the downtrend was with this candle right here. When it broke below this price level, this old support level, when it broke back below there, that's confirmation of a downtrend, a broken support level. You combine that with your knowledge that, hey, they're talking about cutting back on the bond buying program in the US. So you have both of those bits of knowledge, the fundamental reason why it broke the support and the visual confirmation that it did break the support. A sell stop pending order would have sold from right here. You could have had that programmed, and 1, 2, 3, 4 hours ago, 5 hours ago approximately, that sell stop would have triggered. Okay, that simple. That would have entered around 1737, and we're sitting at 1723 right now. So you'd be about $15 per ounce in profit. A one lot position, you're up $1,500, right? A tenth of a lot, you're up $150, depending on your account size and your P&L goals and what's right for you risk-wise. You could have gone after a micro lot or something larger, but the strategy is the same, regardless of what trade size you were taking. You could have had small risk, meaning if your entry point is just below the support level and you are entering because it broke the support, then if it's a true breakthrough, it shouldn't go back up significantly above that. And that's what happened. Once it broke, it plunged, okay? And that's a true breakthrough move. So your stop loss, if your entry price was here, your stop loss would only have needed to have been a few dollars up above that broken support. If it went back above, then it's not a true breakthrough. It's not a significant surge down. And so your risk compared to your take profit price could have been much less risk compared to potential profit, okay? And where would you have taken profit? Maybe at the first support level, which would have been here, where this wick established some support. So you might have taken profit around 1728, 1729. It would have been around $8 or $9 per ounce profit, and you only would have needed the risk to get back above that support level, $2 or $3 per ounce, right? So 2 or 3 times more potential profit compared to risk. If you were going with the fundamental news from a bigger perspective, then you might not have taken profit yet. You might have been looking to say, okay, if it breaks the support with a decrease in the bond buying program, maybe you expect gold to drop all the way to 1700 flat, right? You look at the one-day candles and you say, wow, here's a support level right down here. Look at this wick on the one-day candles. So that's down around 1677 it hit on those one-day candles. So to think it could go to 1700 even, that's not ridiculous to think that. If the fundamental situation is strengthening USD and potential upcoming cutback and stimulus measures in the US causing a continued strengthening of the US dollar, then perhaps gold does drop to 1700 or lower, right? So if you're a scalper, you already took your profit on that move. If you're a more patient trader, you're still holding the position. Maybe you slide your stop loss down to even or something, to break even. Those are some tricks you can do to manage risk as well. But in any event, we understand why gold's dropping. We understand why it broke the support. And had you looked at this idea sooner today, you could have already made a nice profit. Now, the question is, if you didn't do any of that yet, well, what do I do now? Should I sell on gold? Is it just going to keep plunging? And, you know, the answer is maybe. We don't know for sure. We never know for sure, right? We can analyze the current situation and say, okay, it broke this support level here that we drew, okay? We're looking at 1 hour candles, and this support level just broke a couple hours ago. Down it went. Now the question is, where's the next support level? We look at 4 hour candles. We don't see it. We look at 1 day candles. We say, okay, I see right here, way back here, a little shelf that's higher than this big wick that dropped down here. So if I want to look at this little shelf, I already drew a line. Okay, you see here, this was an old support level right in this area, which it broke below. And we go to the next level and we say, okay, it would be the bottom of these 1 day candle wicks here, 1 day candle, 1 day candle. There's a support level. And we say, wow, it's right on that right now, isn't it? It's hitting that line that I just drew. If we go to 1 hour candles, we say, there's the second line I just drew. Okay, that's based on 1 day candles from a ways back. This is another support level. So you might expect in the short term, this could bounce back up. It's hitting the next support level. So if you're intent on selling on gold in the short term, but you don't like the entry price, I kind of understand why. We're hitting the next support level on the 1 day candles that we just saw looking back. So perhaps you say, okay, I want to sell on gold, but not from this price. If gold bounces back up towards this broken support level, back up here, where it broke this price level, perhaps it comes back up, then I sell from this price because it should act as resistance now, right? Broken support, it broke for a reason, strengthening US dollar, cut back in the bond buying program. That's the reason that support level broke. That reason is still there. So now that broken support should act as resistance because that news is still there. What caused the price level to break is still there. So if the price comes back up to that old support level, it should now act as resistance based on the fundamental news situation. So an opportunistic spot to sell from, given the current fundamental news environment, would be if this bounces back up near that, what should be resistance now, then you might sell, okay? Now, of course, the news could change. So you're gonna have a stop loss just above that if it breaks above that price, then you say, well, whatever news must have just hit, it reversed that broken support and went back above it. If that happens, maybe your stop loss is right up here. So you might put a sell limit pending order just below the support level, the old support level, which should be a resistance level now. If the price comes back up near that, then you sell with a sell limit pending order. Okay, that's the strategy to go with the current fundamental news, but from a better price if the market will give it to you. Okay, so you then say, how do I trade from a high? How do I sell from a higher price? Very simple. You go to pending order, you go to sell limit, and you sell from whatever price higher than the current price you think makes sense. So let's say 1727, which is just below that resistance level. The price went back up there, maybe you want to sell. And you say, okay, if it breaks above 1730, let's say, so 1730.5, okay, if it goes above that price, then you say, it broke back above the resistance, so I'll give up on my sell. And if it does reverse off that price and drop, then you might say, well, I think it could reach the low that it already hit today, which is just above the one-day candle support level that we drew down here, which would be about 1722. 1722. So we're going after $5 per ounce profit if it goes back up to our price, and we're risking $3.50 per ounce. So again, we're in a situation where the reward is better than the risk, and the fundamental news would be on our side. Okay? So there's one idea for a pending order. If the price comes back up to our resistance level right here, that's our entry price. If it just keeps dropping, okay, well, we're not in on it, right? Would you want to buy off this support level? It's testing the one-day candle support level right now. Would I buy off of that? And based on the fundamental news situation, my answer would be no. Why should I trade against the fundamental news? The fundamental news is gold should drop right now. So if it breaks that support level, it might make more sense to sell. If it breaks the support level, it's testing right now in the one-day candles. If it breaks that support level, it's confirming a continued downtrend. In that case, you could sell on gold, put your stop loss above this support level now, that if it's broken should act as resistance. Put your stop loss above that if it breaks, and sell from below that broken support. Right now, it didn't break it. It's testing it. But the current environment, it's hard to say buy in such a strong downtrend with fundamental news that says you should sell. Okay? So hopefully you got in on the broken support up here. Or hopefully it bounces back up and you can sell from just below that now. Or if it breaks this support, you could consider selling from the lower point and having your stop loss back above. I think we likely could see a bounce in gold off this one-day candle support before we get any further significant dropping. We will see. Okay, let's go to crude oil and analyze that. We can look at Nasdaq, Margaret, no problem. We see crude oil over the last 3 hours has pushed down. And you'd say, okay, we understand why it pushed down. The US dollar is strengthening. That's one reason to pull crude oil down. If there's less inflation, strengthening USD, that pulls all the commodities down, right? Usually. Now, we're looking at some reasons also why oil should drop. The crude oil inventories, instead of being down 1.5 million barrels as expected, we're up 4.5 million or more barrels. So that also tends, if the supply was way, way higher than expected, that also tends to push oil down. Now, why might you be looking for a nice low price? Maybe the next support level to potentially buy off of it? A couple reasons. Goldman Sachs thinks $90 a barrel sometime soon is realistic. Also, more and more people are trusting that the vaccines are working, lowering hospitalization rates, even though there's spread of the virus still. Those who are vaccinated have much lower hospitalization rates, and vaccinations are becoming more and more available. So there's some reasons why oil could go back up after pulling back down. So you say, all right, we can have some ranging movements then on oil because there's mixed fundamental news. Where we would have expected to see a crash in oil today with the inventories being so high, we didn't. We saw a rising of oil and then just a pullback. So you might say this support level, okay, support, goes up, finds support in this area again, goes below it, comes back above it, finds support again and bounces even today, and now comes back down near what has acted as a support level partially. So you might say, let me take a shot that the opposite could happen with oil. That, okay, we see gold crashing with a strengthening USD, but we have reasons why oil maybe could also go up. So you say, let me buy on oil. Fundamentally, there's mixed news. So we could expect ranging on oil. I'm not going to risk much. I'm going to put my stop loss below this support level right here. So I've got a support level here that's been tested a few times, but held a few times as well. And if it breaks that support and comes down here, I'm out. If it's going to bounce with the mixed news, I'll take my profit at this first resistance level. Okay. Why is that a resistance level? Today it hit that price and dropped just 3 hours ago. And if we go back here, it acted as resistance and down before it finally broke above. So we see 1, 2, 3 instances that this price level was resistance. And since we have mixed news today, you might not expect oil to go flying up through resistance levels. In fact, it could keep dropping, right? So if you're going after a bounce up on a mixed news day, you're more likely to hit your take profit if it's not beyond too many resistance points. And so if we do get a bounce, that might be a spot where you could take profit, and it might make sense if you're scalping. I'm going after more profit than risk. And on a mixed news day, maybe it gives you a better than a 50-50 chance here to go after a profit, obviously with no guarantee. But it's kind of a hedge as well. If you're buying on oil here, but maybe selling on gold or something, you're kind of hedging yourself a bit there too. Because a strengthening USD or a weakening USD, you're probably going to win on at least one of those. Fingers crossed anyways. Does this affect natural gas? Yes, for sure. A strengthening USD, what effect would that have on natural gas? Typically, that would be to pull the price down, right? But if Goldman Sachs believes that there's going to be enough pent-up demand for energy that oil could hit 90, then that also then would say, well, they probably would believe that natural gas then could be buoyed up as well, because natural gas supplies energy also, and we are heading out of the winter months in many areas, or I'm sorry, out of the summer months in many areas around the world, and in the coming months there could be a larger energy demand for natural gas with winter setting in many places. So as we move into fall and winter, so Goldman Sachs' view on oil, maybe if you ask them, could also be a similar view on natural gas, but we don't know that for sure. But what we do know is we've got mixed news on the fundamentals on crude oil, so a ranging type of movement could make sense. And we do see that oil just 3 hours ago came up here, which flies in the face of the strengthening USD, right? It went up when you would expect it to have been dropping like gold. So it already showed that it could go the opposite direction than gold was going, up against the US dollar while gold was dropping against the US dollar. So to find a nice support level and try and trade on this ranging type situation on oil can make some sense. Okay. Any other? Oh, Nasdaq was requested. Thompson, or I'm sorry, Tamsaka, if your audio problems persist, maybe try connecting and reconnecting. Okay, so the US Tech 100 used to be named the Nasdaq 100. We had some renaming of some of the instruments. So the Dow Jones is the US 30. The Nasdaq 100 is the US Tech 100. The US 500 is the new name for the S&P 500. So, but those are the U.S. indices, and so the U.S. Tech 100 is the Nasdaq. Why is the Nasdaq dropping back down right now? The U.S. dollar is strengthening, right? Makes sense. If the U.S. dollar is strengthening, how do you think Wall Street feels about stimulus measures being pulled back? How does Wall Street in general react to stimulus measures being removed potentially? Not good is the answer. Usually, Wall Street loves free money and low interest rates. They love stimulus. Wall Street goes up with stimulus measures are added. And the opposite then can be expected if stimulus measures are thought to be maybe potentially to be removed soon. That has a negative effect typically on Wall Street and on the equities in general. Yeah, folks, we'll be looking at the future NFP numbers and other announcements that come out for sure. So those will certainly have an effect as well on the view of whether there's inflation, whether stimulus measures should be pulled back or not. Sometimes the better the news, the worse the market does in that regard, because if the NFP numbers are really good, then the viewpoint will be, oh, for sure they're going to cut back on stimulus. So usually, NFP numbers traditionally, if they're really good numbers, you see Wall Street go up because, hey, the economy looks healthy. But in this case, if the NFP numbers are really good, you could see a sell-off on the stock market because the idea would be, hey, the numbers are too good. We're going to lose our stimulus measures. And so it's kind of bizarro land we're in, but that's been the effect lately. So we do see crude oil starting to bounce on this position we took that we simulated on the demo account here. The US Tech 100, let's take a look and see, do we have a support level? And if we look at the 1-day candles, we say, yes, we do have a support level. It's right here, okay? You see this drop on the 1-day candles from a while back. It bounced up from this price level right here. If you look, where's the current price level? Exactly there, exactly on that spot, okay? So we see the Nasdaq has dropped to a 1-day candle support. Doesn't mean it won't break it, but currently it's hitting a 1-day candle support just like gold was, okay? It's hitting a spot where you could say, maybe it bounces. If I'm a purely technical trader, I might say, I'll buy. Okay, I just took a buy position that's purely technical based on Nasdaq. I'm putting my stop loss below that 1-day candle support. If it breaks it, I'm out. If it bounces, maybe I stay with it to the broken support right up here. Okay, we see the 1-day candle support was right here. It broke it yesterday, okay? And then it confirmed it as resistance today as it tried to go up and drop back down. So if it's going to bounce, that should act as a natural resistance right there, the 1-day candle broken support, which confirmed resistance today right here and pushed down. So this is a purely technical trade, buying off the 1-day candle support in an environment that fundamentally tells you shouldn't, right? So that's the weakness of a purely technical strategy, buying off the support, completely ignoring the fact that there's reason for the US Tech 100 to drop, right? And so I'm showing you an example of something that a fundamental strategy would not do. We wouldn't buy like that simulated trade, but a purely technical trader would, and you could find success that way. What would the fundamental trader do? I would go to the 4-hour candles. I would say, if this comes back up, I'll sell from this resistance level up here, just like we prepared for the gold, right? If you don't like the price that it's at to sell from, but you still believe the market should drop, then maybe you're patient and you wait to see if this bounces up. You're not betting on it to bounce up, right? You're not buying like the technical trader example is right now, but you're hoping that maybe it bounces up. And if it does, then you'll sell in the direction that the fundamental news says you should. So two different philosophies. Buying off of a support level that's not supported by the fundamental news, or waiting for a potential bounce. If it occurs, selling in the direction that the fundamental news says you should. Okay, And a lot of times this is what you get later in the day. Okay, this is a later webinar. We're looking at movements that already occurred off of today's news. It already broke the support level. It already went up, confirmed the resistance, and dropped, right? We needed to be selling from the resistance 8 hours ago from up here. It's not there right now. So either you're trading on a technical move on the way up against what the fundamental news says should happen right now, which could win. It's a measured risk. Stop loss is closer than the take profit, larger potential profit. I'm okay doing that on occasion. But fundamentally, what makes more sense is if it's going to come back up and the news cycle hasn't changed yet, to sell from the resistance is a lot more comfortable, to go with the direction of the fundamental news, in which case you're preparing another pending order as a sell limit to sell if the price comes back up, say to 14,870. Would be an opportunistic spot to sell from. And then you put your stop loss fraction of the distance away of your potential profit. 910, 14,910 would get us past the resistance. And the potential profit could be even before today's low, 14,750 or 745, okay? So we're going after a profit that could be the same as what you're risking or more, depending how you set this up. And so then I place that pending order and I say, if I get my opportunistic price, I sell. Okay, an entirely different strategy. Now you see the technical strategy is working right now. It's up 150 and you could say, you know what? I pocket that. And that's maybe a strategy that you'll find a higher success rate with if you're trading against the fundamental news, to go after just a temporary bounce off of a support level like we saw in the one-day candles. You might not expect a sustained movement up, but at least a temporary bounce against the fundamental news because there's such a support level on the one-day candles. So we took a quick bounce off that support level, but not expecting a sustained move necessarily up. But then setting up that if there is a sustained move up, you sell opportunistically in the direction of the fundamental news, which is a sell, if you get the better price that you like, okay? So scalping bounces off of support levels in a larger downtrend, you probably find a better success rate on that than expecting sustained moves against the fundamental news, okay? All right, so nice to be able to scalp a small profit like that, to simulate that, and still be waiting, hopefully, for a better price if you intend to have a longer term move in the direction of the fundamental news, okay? We still see crude oil trying to bounce. That's a tricky one because we've got a strengthening USD, but we've got some reason, like we talked about, for crude oil to jump as well. It'll be interesting to see if our pending order up here gets triggered, and our potential profit, our risk setup is in our favor. We've got a much larger potential profit here than what we're risking. We can see that the entry price is here. We're risking that distance, and our potential profit is all the way down here, about 3 times potential profit compared to risk on that pending order for the Nasdaq, for the Tech 100 here. Question about the German 30. Did the name change? Good question. I'm not going to pretend to know that for sure that name did or did not change. Let's look and see if we can find the German 30, or someone saying it might be called the German 40 now. Let's have a look. Here it is, DAX 30. So it's still called the DAX 30. Okay, why do some call it the German 30? Because it's out of Germany, the DAX 30. So it is not called the German 30 or the German 40. It's called the DAX 30, and it's here. Okay, we see similar movement. It tried to go up today. It hit a resistance level. Where's that resistance level? Right there. Okay, this was an old support. and support on the 1 day or on the 4-hour candles, which was broken a while back, went back above, now it broke below it again, and here it found resistance right at that old broken support level. Here's the resistance showing again. So if you expect it to drop with the negative news today, this could be a market move. Instead of doing a pending, maybe this one you sell right away. You put your stop loss above the resistance. You put your take profit before this support level here. That because we simulated a market move here instead of a pending order, now our risk reward is not as opportunistic, right? So we're risking a little more to get our stop loss above the resistance level than what our profit is. So now we have larger risk compared to reward, but that's because we did a market move. And we're not waiting and hoping that it goes to a better price before selling. Now you'd say, well, why would you do that? Why would you take a larger risk than reward? And the answer is you would do that if you believe this is just going to keep dropping. What good is a pending order if it never gets triggered, right? I could put a pending order up here like we simulated on the Nasdaq, and if this just keeps dropping, then it never gets, I don't ever get in on it. So sometimes by risking more and going after a smaller reward, you actually make up a better profit, because this could just keep dropping, as could the Nasdaq. And the Nasdaq we're not even in on if it keeps dropping right now. So sometimes if you get a bearing on what's the fundamental news right now, and if you feel strongly that, hey, this is just going to keep dropping, then you're not playing around with hoping it pulls back up before it drops. You just sell now if that's what you believe. And so that's what we're simulating in this move, is we're just selling with the fundamental news as we know it right now. We're putting our stop loss above the resistance level and our take profit just before the support. And we're saying, okay, we're risking a little more than what the potential profit is. And that's okay sometimes if that's how you feel about the market, right? I'm not here to tell you, by the way, that you should be selling on these different instruments that we're looking at or buying on oil. I'm just telling you the fundamental news situation and how that in general affects the movements of these instruments, which we can see it already affected the movement in the directions we're talking about. And now it's up to you to decide, do you believe that fundamental news is still strong enough to continue those movements, or to allow bounce backs and then continue those movements? And with trading, there's always some projection. You'd never know for sure, right? There's projection as to how long will this momentum last, and that decision in the end you need to make for yourself. We've already been able to scalp a nice bounce off of a support level. And now we're waiting to see what will some of these moves do through the rest of the day. Will this negative sentiment on some of the storylines we looked at, or positive sentiment on the others, take over? Right now, it's really about the US dollar being strong if we're looking at selling on some of these instruments. Okay, they're paired against the US dollar if we're talking about gold. If we're talking about oil and natural gas, they're also paired against the US dollar. The DAX is not. So pick your poison here, but the fundamental news, the technicals, you combine that together and do the best you can, right? I think this is a good place to stop. We've got a pretty strong bearing on what's happening with gold, and we see it's still showing strong downward movement and momentum. We've got a strong bearing on what's happening with the US Tech 100 as well. As it's trying to bounce off of a support level, we know that there's some downward pressure on it. Okay, thank you all for joining. We've been going for about an hour, so I think it's a good place to stop. Expect some large movements here the rest of the evening and into tomorrow, so good luck with those movements. Pick your spots and go with your gut feeling with what the fundamentals tell you right now. All right, thank everybody for joining, and we'll be back at it with another session earlier in the day tomorrow. All right, bye for now.